Let's talk about the types of investment companies. We'll start with limited partnership investment vehicles, and then we'll swing back and look at mutual funds and exchange traded products. So limited partnership investment vehicles are organized not as a corporation, but as a limited partnership. And so your ownership is a stake, as a limited partnership equity stake. These are extremely illiquid. There are very severe redemption restrictions, meaning that in some cases, I can take my money out once a quarter, but I need to give them a 1 month notice because they have to sell stuff that's difficult to sell in order to refund my stake. And sometimes there's just no redemption possible. And so we'll see in certain types of funds, if I'm going to invest in a fund that's going to buy very, very, very small companies and then run them for a while, or at least hold them for a while as they are run and they get bigger, there's no way to get my money back. And so they're extremely illiquid, very, very severe redemption restrictions. We'll see that that's not the case with mutual funds. In addition, they charge very high fees. So 2 and 20 is a standard. What that means is 2% of assets under management in any year and 1/5 of all profits. And sometimes it's 1/5 of profits over some benchmark, or sometimes it's 1/5 of profits. If there was a previous loss, they have to get back to zero. But the fees are very, very, very high, 2% and 1/5 of all profits. And this is very important. These types of investments are only open to accredited investors. So you have to have earned income above $200,000 a year, or $300,000 for a couple, for this year and 2 past years. You have to have net worth, excluding your primary residence, of more than $1 million. And there's also this thing called qualified purchasers, which have $5 million worth of investments. But normal people cannot buy these funds. And that's very important. And the argument is that because of the liquidity restrictions, or because they might be complicated, you need to demonstrate some level of ability to take a loss or sophistication to be able to invest in these funds. And so, yes, we'll talk about ways in which small investors can get into similar types of investments later on. But for now, these limited partnership investment vehicles are only available to people who have either high income or high wealth. Okay, here's a list of the types of limited partnership investment vehicles. The first are venture capital or angel funds. And these are funds that invest in very, very, very small, very, very early businesses. And they'll generally be a 10-year period, and they'll spend the first 3 or 4 years trying to pick the companies that they want to invest in, and then they'll spend sort of 3 or 4 years watching these companies grow, and then 3 or 4 years as these companies are sold or go public or whatever happens to them. The next type of limited partnership investment vehicle are referred to as private equity funds. And these are funds that own the stocks of companies that are not public, they are private. And generally they invest in slightly later stage than venture capital or angel fund investments. And private equity funds, there's a broad category of things that are private equity funds. There can be small cap, mid cap, large cap. They can be industry focused or geography focused. And the goal of these is to get EBITDA as high and as stable as possible, as quickly as possible. Because these companies will then be sold, they'll have an exit at some multiple of EBITDA. And they do this through better management or maybe economies of scale through a roll-up. A mezzanine fund makes what are referred to as mezzanine investments, and these are mid-level investments somewhere between debt or equity, generally later stage. And so they'll make subordinate debt or preferred stock type investments, not necessarily ownership stakes like private equity or VC funds. And then the last category is huge. Hedge funds. And there's a number of different strategies that all sort of fit under this name hedge fund. And so I'm going to talk about 2 hedge fund strategies very briefly.